What if the biggest money in crypto already knows exactly when Ethereum is about to explode, and they're loading up right now? Here's what institutional traders aren't telling you. Ethereum just hit number 2 on CoinGecko, and that's not random. When assets climb the market cap rankings, it usually means something's shifting beneath the surface. But here's the thing most people miss. The real moves happen before the price catches up. Institutional investors play a different game than retail traders. They don't chase pumps. They accumulate quietly, stack positions for months, and then the price follows. Let's talk about what's actually happening in the Ethereum market right now. On-chain data shows accumulation wallets, the big players holding substantial ETH for the long term, are at levels we haven't seen since 2020. That's the year before Ethereum went from $730 to over $4,800. Coincidence? Not really. The 2026 thesis isn't new for institutional traders. Here's the timeline they're looking at. Ethereum's utility keeps expanding. Layer 2 solutions like Arbitrum and Optimism are handling billions in volume. The Shanghai upgrade unlocked staking, and now ETH is becoming a real settlement layer for global finance. When institutions mapped out the next 3 years, they already locked in their positions. We're watching the accumulation phase play out in real time. Compare this to Bitcoin's position. Bitcoin gets all the headlines, Ethereum gets the infrastructure. But when scaling solutions mature and institutional adoption follows, Ethereum's upside tends to be sharper. Historically, ETH outpaces BTC in bull markets because there's actual utility driving the demand, not just scarcity. Here's what changes the game for 2026. Regulatory clarity. Once the US government, or any major economy, officially classifies Ethereum as a utility, not a security, institutional money floods in differently. Pension funds, endowments, and mega corporations can actually allocate to ETH without legal gray areas. That's not speculation. That's how institutional capital flows once rules are clear. The accumulation pattern we're seeing right now is textbook pre-bull run behavior. Whale addresses aren't selling, staking rewards are compounding, and new ETH locked into smart contracts keeps hitting records. These are the moves that precede 10x moves, not the hype cycles on Twitter. If you're sitting on ETH, understand what you're holding, not just a token, but infrastructure that's becoming harder to ignore every quarter. And if you're waiting for entry, watch these accumulation signals. When whale activity cools down, that's usually when price acceleration starts. That's how these markets work. If you want more crypto breakdowns like this, subscribe to Crypto Sayans. We post every week.